You are well on this Friday as we get to take a look at the markets together. Specifically, we're going to have a focus here on the equity markets. We're going to be taking a look at this bounce at the on the stock market outside of this descending wedge. And then we're going to take a zoomed out view and a deeper look of what's happening. And we're going to try to figure out whether or not this bounce has legs that's going to continue, or whether or not indeed this is a bull trap setting up. Everyone, this is Jordan with Conquer Trading and Investing. If you're new here, welcome. Definitely subscribe. And if you're not, welcome back. CTM, yesterday's session was absolutely a banger. So fun to be there with you all. Gemma, great to see you here this morning. I hope everyone is doing really, really well. Bitcoin tagging this morning, $104,000. Before we even get into it, let me go ahead and start off with Bitcoin and just do something out of character, something that we don't normally do. And by the way, remember, this is right now a headline-driven market. China and the US are talking this weekend in Switzerland to discuss trade deals. I suppose if the odds of them walking away with a deal on the first meeting would be very and highly unusual. I think the Chinese just want to get a feel for where America is at. And I think America is hoping that the Chinese walk away with like a 50% tariff. You know that President Trump, he floated the idea of an 80% tariff today versus the Chinese. I think from what I hear from the chatter, a 50% tariff would be absorbed roughly, let's say 12% from the retail, whether that's Walmart, Amazon, whoever have you, 12% from the manufacturers and their supply chain, and then 20% from the American consumer. By the way, speaking of consumer and America and the retail, on the calendar coming up next week, we have a few big items. Among them will be CPI. CPI expectations continue to be that those disinflationary forces continue to take hold. That could change after we have some type of resolution to the current trade deals. And if indeed we are seeing that passed on to the consumer, we could have a one-off bump in some prices. Then likely deflationary forces once again are able to be to trump that. No pun intended whatsoever. So we have CPI on Tuesday. We have on Thursday, we have PPI. We have Powell speaking. We also have unemployment claims, which any surprise could definitely move markets. And then we have retail, things to watch out for. Today, we have a whole host of Fed speakers. I don't think Fed speakers really matter at the moment because all that they are going to continue is the current communication they've been putting out to the markets. Bitcoin, this is completely out of character, unusual. Nevertheless, here's what we're going to be doing. If y'all remember, our discretionary entry was right over here, $83,500. And since then, we've been moving that stop loss up. We've now hit the area, this 94,000 de-risk level that we've hit. We are coming into it as morning as resistance. It's time to go ahead and just take profit. Highly unusual. We don't normally take profits without letting that run as far as it's going to run and move into a stop loss that's there for protection. In this case, this is a discretionary override and going ahead and taking that profit. If we break above and close above this important area, we want to reclaim this technical breakdown. We want to repair it. That will then obviously set up a move towards and hopefully to take out the all-time highs. We have target zone well above. Look at that. We're targeting somewhere between 122 and 130, upward sloping, so variable if we get a close above there. If we get a close above, we'll look for a point for a re-entry At this point, though, it's time to go ahead and lock in a trade. Again, highly out of character and unusual for CTM to navigate anything like that. Let's start off here with what's going on the Nasdaq. And this kind of all begins, or this story does begin, with the DeepSeek scare when the Chinese released DeepSeek. By the way, it was a fund out of China who uses machine learning algorithms, and they were able to go ahead and put together a bunch of money through their trading. And then as a side project, they began some LLM work. And what exactly they had to work with is unclear. Nevertheless, they did release the DeepSeek model. And at that point in time, the whole AI bubble came into spotlight. And since then, actually, we had the bounce off of it. And then shortly thereafter, obviously, we were taking out that low. Once we took out that low, that became much like we just looked at Bitcoin. That became a very pivotal technical point that we need to repair. And we haven't yet done that. Sorry, I was getting up the pointer over here. The DeepSeek low, we bounced off of it, and then we broke down. Once we broke down, we had a retest and made a new low. We've since, obviously, this is where Trump said buy, and then he had the 90-day pause on the tariffs, and you can see right over here we broke out of the wedge. That was the first opportunity of a technical repair in place. We've obviously were well aware of that, feeding off of it. And at the same time, upon that repair, we're saying, where is the breakdown? And we have this trend line over here. We're going to look at that in a moment together. And you can see right now we are into this resistance level. And this, by the way, this was off, this session began, or the preparation for this session began as we were looking at the Hypernova. We're actually going to take a look at that, and as well as NVIDIA. NVIDIA stopped out this morning, so we'll look at that in 1 second. What's the logic behind locking in versus following the standard discretionary protocol? That's the thing about discretionary trading, is that it's completely discretionary. Now, obviously, you try to make it as rule-based as possible, and you want it to reflect, in many ways, a mechanical strategy. The thought behind that, though, is that, first of all, we are into an area of strong resistance, and it's ahead of a weekend event where likely there's going to be no resolution between the U.S. and Chinese. And it's fantastic they're talking, but the only way that there will be a resolution is if actually the Chinese are in dire straits. And I don't think they are. There's varying opinions. There's some people in China who are talking about how a lot of smaller manufacturers are really struggling, and that's soon to arrive likely in the US. A lot of small businesses in the US that rely on manufacturing in China are likely soon going to be struggling, and the next few months are really important to find out whether or not in the US the hard data all of a sudden starts turning down and weak. And if that does, the April low definitely comes into play. That could be taken out. We're, broad strokes here. Let's try to keep it easy. Now, could we walk away from this meeting and U.S. and China have realized? I mean, the Pope was just elected, and that was actually a very quick conclave. So it's possible that they walk away from this meeting, and if that happens, I think Bitcoin is going to rocket like a rocket. And if Bitcoin rockets, you're going to start seeing a lot of people saying we are entering into the blow off phase. And you know what? We'll talk about that, but obviously that's not in play due to yesterday's session. Andrew, I'm glad you're here as well. But we all have our Bitcoin position, right? So even if that happens, the best thing ever. And then from a trading perspective, you know that you're hedged because Bitcoin bull runs is long, Bitcoin 107 is long, like Bitcoin 101 is Bitcoin is long going into the event. So I think it's very prudent here to take the profit. It's a nice size win, and again, that's a very rare occurrence, but I don't think the U.S. and China are gonna, a lot of this current move up has been on, first of all, as soon as it was made known to the market that the U.S. and China were actually going to be escalating like trade deal talks, like in a good way, getting both sides together. And from the U.S. side, it's basically the second highest level in the government who gets to make these decisions, the Treasury Secretary Bessent. And Trump today said to him, I think he should do 80%, but it's up to him. So Trump's saying that like these negotiations, like this guy, the Treasury Secretary Bessent, he gets to make the decisions, and whether that's true or optics, who knows? Likely, they obviously come in strong. They're looking to negotiate. I think the U.S. is looking for, it seems to be a 50% tariff, which is significantly higher than the original 10% tariffs that this all began with, and whatnot. All right. So that was the discretionary, and I really want to focus the beginning of this session off here on the stock market, and I want to focus on whether or not we're seeing a bounce and whether or not this bounce has legs that's actually going to continue this bull market that we're in. And if you look at the lengths of bull markets, right, this current market, which began in January 2023, and by the way, we were there, right? That was a technical trend line break, and we were like, listen, everyone is so bearish. I'm bearish. And this is a close your eyes type moment because I don't want to flip bullish here, but that's what the technical suggests. That's what the charts suggest. So we did it. And then shortly thereafter, we had that waterfall moment. We inverted the Nasdaq chart. We said if this trend line breaks, it's going to waterfall down and invert it back up. It did break, and sure enough, the bull really began running. I think that's right over here, or it's right over here actually. And then it began its run up. So this current bull market is reached the duration that many the average bull market lasts, and of course it could go another couple of years, right, and be a really mega bull. And if that's happened, that would be like the stretch from 1998 into 2000. And or it could, this is not average, but it seems to suggest that, you know what, there could be another year or so left of duration. And if you look at past cycles from this perspective, you could see that, well, first of all, what I get off of this chart is that, no, I'm not overriding mechanical whatsoever. You know why? This is a great question, but the reason being is that there's been a gazillion times in my mind where I was like, I will never enter here. This is ridiculous. And the mechanical trade is taken, and it always winds up being better. On like mechanical system, the only type of override that I could foresee would be like something like if a plane crashes into a building, right? Like morning of 9/11, an event like that calls for discretionary overrides. No, it's a great question. Not no discretionary override whatsoever. Look at the big bear market drawdowns, 50% when you had the strong out, like the Nifty 50 and all of out of loss of words, right? We know that this current market is driven by a select few stocks. As a high concentration of the markets is into a few different stocks. This was the Nifty 50. It led to a very big overall bear market drawdown. Tech bubble as well, right? It was led by, obviously, pets.com and tech, and it led to a very big market correction. Are we in a similar situation with the Mag 7? Is that ultimately going to lead to a big correction? Look, everything's on the table. At the end of the day, we need to follow the technicals and stay in front of it. This current, let me start off with here and with the chart. This current move by the market, right? We see Goldman right now is saying this current streak will end in very short order. Okay. Do we believe an investment bank? Do we believe their desk? Or are they actually trying to get liquidity to move their way? Obviously, we don't know. I put out a tweet, I think it was 3 days ago, and I said, this may be the best it gets, position accordingly. And then all of a sudden, people are like, wait, Jordan, like, how is it possible that you say that, and then all of a sudden you're like, like the Ethereum trade was open before that. Bitcoin has been open since that. Solana opened this morning, by the way, on the Discord. The alert did not come off for Solana because it was set with the wrong parameters ever since our change. I will go ahead and correct that right away to make sure that confirmation is there for you and it doesn't happen again. And at the same time, make sure you're setting these alerts off also on your own machine and or to go off to your phone, email, et cetera, et cetera. So listen, at the end of the day, regardless of my thoughts and view on markets, I'm trading what is happening, and we're positioning and allocating capital around momentum. So even if I'm saying that this could be the best, and after yesterday's price action, someone would be like, well, that's obviously not going to happen, but let's see what happens on Monday and into next week. If we are seeing US and Chinese walk away and then like there's just no meeting point to begin with, markets are not going to respond favorable to that. Let's break that back up and look over here. And the whole time I had, sorry about that, y'all. You guys got to be quick. There you go, Ace. Thank you, brother. What I was showing was that well before I said that, we were positioned long Ethereum, which this trade continues to run, and we love that. That's beautiful. We've been positioned Bitcoin since, and the same thing with Solana now as well. We're here to trade what is happening, regardless of what our thoughts and our opinions are. Now, at the same time, we want to have that awareness to help us have a really good idea of what is taking place and what our expectations are. It helps us mentally, for sure, and psychologically. So this move, though, has been driven, though, by retail. And look at this. This is the longest buying streak of data, 21 weeks, number of consecutive weeks that private clients were net buyers from 2008 to the present. And you've never, it was $40 billion of buying in April from retail. And that's from retail, and this was retail driven. And by the way, right, it's not the same. If you look at so that's later, like we know that the CTAs, they led the massive selling on the downside. But we talked about earlier in the week, over this week, which has been up so far, you're looking at CTAs being net buyers. Even in a down tape, they're buying 7.7 billion. In an up tape, they're tremendous buyers. And in a flat tape, they're big buyers. And over the next month, except for a down tape, which is pretty neutral, 1.1 billion, they are big buyers. So we talked about, could retail, off the bottom here, before we broke out of the wedge, our thought process was, hold on, let me make sure I get the on and off all now. I'm gonna master that. Over here, we were talking about retails, or down here, could be the ones that lead the way up and then force CTAs and hedge funds into the market. And I think that retail is a major player in the market today. And I think that the overall knowledge of retail over the last 5 years continues to grow sharper and sharper. Why they were considered dumb money in the past, I don't think that's the case anymore. I think that they're very agile, and I think that they're very, very smart, and they're becoming a force in the market. And right now, this could be actually retail driving the price up. I don't know if they take profits or not, but they could be this forcing the CTAs to become their liquidity, as CTAs are buying in all markets. And or this could have carry. The CT we get a favorable news from China and US meeting. We're going to see this market continue to move up. We then see CTA buying, pushing it farther. We have buybacks once again from corporates in the market with a $5 billion roughly bid a day. There's a lot of buying to be had and a lot that could support this move up. And then I would expect very soon we get further trade deals. We saw this week a massive pivot with the first trade deal being signed between the US and UK. And if we continue to see more and more trade deals actually come into fruition, I think it looks like the market is going to respond very favorable to that. It surely did to the UK deal. I mean, granted, that was the first one. And, you know, again, the only thing that could put a pop in that balloon would be if US China's divide starts going the other way. That's not going to be received well at all. And let's look at this as well as we put this puzzle together. This is year over year earnings per share growth. And you can say, well, expectations for the first quarter was 6%. And they came in better than expected again at 12%. But look at 2023 and look at the first and second quarter. And you can see that the expectations were -7 and -9%, but they came in at -3 and -6% because they almost always come in better than expected because they're always giving a estimate that they believe they're going to be able to beat. However, if you go back to 2022 and you look at the second quarter, you see that it was lower than the first quarter. And then I'm looking at 12% actual, 10% actual, but it's lower than the 12%. And then you see the big drop to 4% -1%. So it's not so much what the expected is and whether they're beating. It's whether the actual continues to show growth. And look, go back to the end of 2023, right? This is when the bull really began running. We saw the worst in the second quarter of 2023, the worst actual earnings per share year over year. And then from then on, it was a bull. Now, this is not a trend so far, but this is a sign that we could see over the near term, over the next few quarters, weaker EPS growth and quarter over quarter. If that's happening, markets are going to be under pressure. Right now, obviously, stock markets, even with the correction, still at elevated levels. What we've been watching over here, what I see right now, and I'm going to zoom out 1 second just to show you, going back to, remember we were looking for the distribution. Wanted the top. And I want you to focus right over here on this area where price goes ahead and it makes a higher low and then a lower high. So we have a higher low, and whether or not, here we go, and then a potential lower high. So if this stays as a lower high and we don't take out the previous higher high here, and then all of a sudden we break this wedge down to the downside, and then we take out this low over here, this is setting up the actual trigger of the distribution. The April lows will be in question, and then from there on, and what happens below, it could get really bad. And I'm not trying to be or come off like as doomer or bearish, Like we're following the technicals, and right now we have the wedge breakout, and that stands. That's our positioning until we break down. This trend line would be the signal for that. If you look at it from right over here, right? By the way, on the if I don't know if this will. Let me check it out. Yeah, that's not really well, that's a pretty good structure actually, right? I'm watching it not like that. I'm watching it like this. Probably should be watching it the other way. I just showed you, but I'm watching it like this. And if we were to break down from this trend line over here, that then does bring in likely a test of the wedge. If that wedge breaks, I go from our breakout of the wedge to a technical breakdown, and I am bearish because we're in a downtrend. We are in a downtrend right here. So a lot of people, obviously, I think we've seen for the first time go from like heightened fear in the market to now heightened FOMO, right? And right now we're into resistance. We saw it on Bitcoin. It's the same thing here on the stock markets. We're into resistance. So again, a lot rides on what takes place over the weekend. This is a news-driven market. Depends on which way the directions of negotiations go with US and China. There's other things to watch out for, such as if there's an extended ceasefire in the Ukraine, that markets would receive that as bullish. Any further trade deals are going to be perceived as bullish. But the main focus of the market here is going to continue to be what happens and takes place between the US and China. This is what I meant to show, and I didn't get to show. At the same time that retail is mega buying, we are seeing institutional investors rarely bearish this stock. So the last time they was in March of 2020. Hedge funds shorting. So we talked about it was who could get us out of this mega correction, and we talked about hedge funds are selling, CTAs max short here. It has to be retail. It turned out it was retail, but we're not seeing hedge funds reversing their positions yet. Retail might be the catalyst that forces them ultimately, as CTAs are forced buyers up here. It remains to be seen whether or not they get on side and it works out in their favor, or they wind up being the liquidity for retail. This is an interesting chart. I don't really know what to make of it. Guys, we have 100 people here live. It brings back such great memories doing these live streams with you all. If you haven't already and you're here hanging out, please go ahead, take a second and hit that like button, smash that like button. If you're not yet subscribed to the channel, go ahead and do so. This is overlaying the Dow Jones with Canadian dollar, Japanese yen. And it's suggesting that the cross of Canadian dollar, Japanese yen could be leading by around 5 months. It says that the Canadian dollar, Japanese yen is sensitive to global risk sentiment and commodity prices, right? Canadian dollar being tied to commodities like oil, why the Japanese yen is a safe haven currency, carry trade, liquidity. I don't know. I'm just presenting this because I think it is interesting. Yes. Yes, Falconet. Absolutely. This seems to be interesting. More so the premise than just aligning the fractal by 5 months, right? And look what happens. This is right now, Dow Jones is same thing as the Nasdaq, right? If we do roll over, imagine we roll over, US, like speculate with me. US and China deal falls through. Markets don't like that coming into early next week. And then some trade deals continue to follow. US signs trade deals with Japan, and all markets rally. And then there's a greater divide between. I can envision all of this transpiring. Let's track it together in real time and see whether or not that actually does, and that perhaps could be another tool. That's a great question. Let me just come back over here and continue with stocks and traditional markets. after we take a look at whether Ethereum is extended or not. And to do that, let me jump over and take a look at where we were with our Ethereum trade. And wow, what a move. This was, by the way, a fantastic short. And I think Trump did something here to get us out of our position. If I remember correctly. And then we were able to re-engage, and now riding it back up on the upside. And is it overextended or not? Right? And so I asked myself the same question here this morning, and I pulled up this chart. I haven't pulled up this chart with you all ever since, like, these lines are all on our chart. This is CTM 1.0 TA. And it was online too. I don't even know why. So first of all, I went and put it on candles, right? It's online. I put it on candles. And this has not been touched since down over here, right? Sometime in April. Last time we looked at it. And look at this. We had CTM, double black diamond, breakout, retest, into the next line of resistance. The next line is here from these two touches. Look how price came right into that resistance. This is so beautiful. It's so cool. I love it. And then you can see consolidation on resistance. Breaks out above. I don't like these weak retests, but we had them. Two retests into the line, still holding, and ultimately blowing through the conservative line. We have a major breakout on Ethereum occurring. A major breakout. And I wonder what that looks like off the peak there. And I thought the retest might be a perfect touch into there. But that's super. Okay, I'm cloning the line of the conservative line. I'm just bringing it up to the peak. Look, as we came up over in there. Let me come on a smaller time frame. Look how we came into there, and then resistance, consolidating, broke above. I would love to hold above that line. As long as we hold above that line, I would say this is a major breakout occurring on Ethereum, and this is fantastic. And again, we're just positioning around momentum, which is the only reason that we're in this trade on the upside, right? But how cool to see, like in forward test of our lines, double black diamond, conservative, all blowing out, breaking through. And that's a major breakout for Ethereum. That's all I could say, because that's what the technicals are saying. And we're positioned on the right side. Does it look overextended? Yeah, it looks overextended, but guess what? So did the move down, right? Like, you had a 66% move down in 3 months. So, is this about 50% of the way? Almost. So there we are. Great question. And that's beautiful. And not only that, it reminds me of, you know what that reminds me of? It reminds me of the summer of, this was on CTM 2.0. It reminds me of the summer, July of 2022. And this was right after the hottest CPI print of 9.1%. This is the morning of the print of the CPI, Wednesday. And 9.1 market originally sells off. It's a liquidity grab and then rips up. Why did it rip up off a hot print like that? Because the market, and we did, you remember the work we were doing? The macro can change rapidly. Public video, Twitter threads, and we started looking at commodity prices across the board. And we were showing that this is where inflation was peaking out, and we were seeing the technical breakdowns. The macro could change rapidly. Nobody saw it coming. I remember clearly because we did, and we were all over it. It did take a few more months to actually roll. It peaked there. It didn't roll over. Didn't roll over until November of 2022. Nevertheless, out of nowhere, Ethereum puts in this 50% gain, counter trend on the upside. And this is what this current move reminds me of. Out of nowhere, you see that, boom, rip it on the upside. Too bad CTM 2.0 didn't hold on to the full move, but is back in over here and holding. I heard Hypernova said he's loving the MicroStrategy template. By the way, Nvidia stopped out this morning on our stocks daily templates, taking a trade, stopped out of the trade, enter long pending on Tesla. And two things of note, right? The first thing is that Nvidia also here on V3, as we forward test, stopped out, same trade. And then obviously MicroStrategy is still holding this open position, forward testing that. We're not seeing Tesla on V3 with a pending long as we are on V2. So that's a forward test for us. We are seeing the IBIT continue to hold over here as we forward test our GBTC template from 2022, now on the spot ETFs using IBIT as the proxy. And buy side boost here after you all like on the sidelines for a while, enjoying it. And that's beautiful. That's what we want. Discretionary on Solana. Let's take a look at it, and then I want to get into a little bit of the dollar. So let me move over, and Solana here entering the long. Let me zoom out. So this would be a long, and then this would be stopped out. Like I know the trend line is here, and that's good. That should have been like that. Mine would probably be like this, actually, right? And again, this is discretionary. I don't know if there's a static angle of this line, and I use a static angle that looks much like this, or if it could be precise like that. If there's I don't know that, right? We'd spend more time on mechanical than discretionary, but interested to know. But either way, this would be stopped out. And then after stopped out, you then go ahead and you move this off of the highs like this. And here's a discretionary entry on Solana, and very beautiful, right? And the only other thing that I would add to this, is this what you guys are looking at? Hypernova. The only other thing that I would add is this second line could be like this, connecting these two instead of doing this type of behavior. I guess it would be like it stopped out on this wick, and the old school CTM 1.0 move line up seems to look better there. But again, I would probably have gone with this one. So Solana long the market. Cardano not. Cardano is close to making the turn. So from a discretionary standpoint, yeah, I mean, I'm thank God for the mechanical here. I'm gonna follow the mechanical. If I'm looking at this, I'd be looking for a break from here, would be a resumption downwards. That's where I would be stalking. Because of this spike out, Donald Trump ruined the chart with his ridiculous. Oh, this was the ridiculous tweet, and then this was the second. I don't know. I think he's just been absolutely reckless for sure. Let's move in. Let's talk a little bit about the dollar today. Let me just see Bitcoin here, consolidating here, holding the highs. Crypto is holding in there strong. Equity markets, you know what? They look like they're into resistance, and ultimately, ever since Trump said this morning, 80% tariffs is what he recommend. Obviously, there's been a little bit of pressure on the markets. Gold reverse, right, is now like, it looks like it's potentially going bid. We'll look at gold a little closer in just a moment on a different chart. All right. Let's take a look. So the dollar we had yesterday, the underbelly breakout, right? We initially started selling dollars right over here, 106, right over here, taking profit on that trade and reversing, taking the reverse on the side. You can see from this, we haven't closed above the red line. Nevertheless, long here currently. Where are you wrong? Where is this move faded? Number one, this would be underneath that trend line, re-engaging the short side. And obviously this is a strong downtrend. And this is a, so far looks very much like a bear flag continuation pattern setting up. Doesn't matter. We're now long, right? And we would love to, I would love to break above this dotted line over here for confirmation that the dollar move is going to have legs. And that will happen, by the way, most likely. Speaking of positioning, right now we are seeing speculative positions are short the dollar, especially versus emerging market currencies, but short the dollar all around, and record long the yen. Record long the yen right now. So this, my hypothesis has been, if trade deals are worked out, you're going to see the dollar bounce. Likely a bounce that is going to be able to be sold into, and longer term, dollar is going to weaken. But trade deals coming to fruition is likely going to cause a bid in the dollar. Now, let's speculate and let's say that, you know what, this weekend, the US and China, it ends badly, you know? This likely is going to break down and the dollar will continue to weaken. And then when we start seeing further trade deals being inked by the US, dollar likely bounces there. I thought maybe I had the positioning on my screen. Speaking of the yen, well, here's the dollar. And you can see the dollar has been weakening, obviously, clearly versus everything over here. Brazilian real, emerging market currencies. Swiss franc during this risk-off move, obviously a beneficiary, as is the Japanese yen. But even the euro has been bouncing tremendously over here. Here's the Japanese yen. And here's a major pivotal breakout. If we, right now, you're looking at record long the yen. If we break above here at that point, I think that offers an opportunity for, first of all, it's a buy impulse. It's a trend line break. And at the second time, that could squeeze the shorts. Also, ultimately, I believe this is a move that could be positioned into and sold as the US dollar wind up weakening. But can you imagine if we get the opportunity into this area over here? That would be a really, really something to keep our eye out and watch out for. That's what I'm watching. Gold, right? And remember, we were all over this back in March of 2023. And right once the Fed began hiking, because once the Fed began hiking, that sets up the slowdown. I believe this move on gold, where you can see is currently very, very overbought. And remember, anytime it breaks out above, price breaks after the correction, right? See RSI trade below 70. And then once it trades above that price point, that's likely the opportunity here for a further move. And but right now, yeah, I do expect that gold is going to continue consolidating, which means pulling back over here. I would be surprised if it continues to extend upwards. But we're watching it very closely. I thought I had a chart of, hold on, it's right here. So this was the underbelly that we were watching gold. This was the confirmation up here. If I extend this trend line, did that hit? Yeah, look at that. It's retested, holding that trend line. So very interesting. Is that also, it's not really. I thought it might be horizontal off of the lows over here, which you can see is also a nice tag of the resistance right there. It's a little above it. Even still, a break below this area right around here, 3,270. That's going to be a breakdown horizontal and more importantly, from my perspective, this trend line. But until then, this confirmation of the underbelly remains intact. So I wonder if this should be looked at for any type of, check this out. Like this is like in uniform to these two. One, two. Let me do this. I'm trying to figure out what I say. I see a lot of noise. That's the outermost trend line. And let me just take this back. I'm gonna not present something in much the form of an underbelly, right? I look at the earliest sign of a breakdown, but I'm not ready to kind of articulate that and present that. So I think rather than this, most people would draw a trend line like this. Oh, sorry, no, they wouldn't. They would draw it off like this. Rather than draw it like this, I personally think the one touch clone trend line over there is more accurate. And since it's outermost resistance, I'll leave it there. A breakout above there, that's the last break of trend line resistance. Obviously, you still have this high over here to contend with, and then the all-time high in gold as well. All right, everyone. We are headed into the weekend, holding some nice positions here. I hope they continue to fall into profit, but nevertheless, discretionary profit taken on Bitcoin. And we're watching here to see whether or not big weekend ahead as US and China begin negotiations, whether or not I would like to reclaim the DeepSeek low as a major repair. First repair was the breakout of the descending wedge. And once that happened, we're watching to see if there's a breakdown outside of what looks to me like either it looks like a bearish continuation pattern. It looks like a bounce that will be sold into. I don't know if it's a wedge or if it's a bear flag. Either way, it's a bearish continuation pattern with the same trigger, the bottom trend line. A close above yesterday's high would also be a close above this very light structure that we have over here. That would then take us into the DeepSeek low. Major repair breaking out above that. Watch out. That's all I can say. Everyone, thanks for being here. Thanks for bringing the energy. I hope you all have a beautiful day, an incredible weekend. Rest up. We're going strong next week. Everyone, God bless you. I'll see you all on the inside.